All right, welcome back to Coffee Cafe. Okay, we have a few more transactions left to do. Okay, yesterday we completed our picking up the 2000 flyers, right? We already recorded that. Everything's good to go. So here we're continuing on with the last couple more transactions that we have left. And we're going to be starting our brand new general journal page 5 here. All right, so we're moving quickly through the journals. All right, and so let's see what happened next. So on that same day, Friday, June 14 here, we end up purchasing from Restaurant Supplies. Here's the receipt number 5831. Okay, and let's see what we have here. What did we buy in store? Right, we bought 1,000 medium coffee cups, and we bought 1,000 large coffee cups.
It is for us to use at the store, right? Not to sell.
In this case, these are paper cups.
Oh, gotcha.
Yes, not coffee mugs.
Gotcha.
Okay, so we went to Restaurant Supplies to buy some paper cups to serve the coffee.
Okay.
All right, and we used our business credit card to pay for these cups. So let's address, what did we buy?
Right there, 11,760 is medium, and then 11,765 is the large.
We finally bought our business supplies, right? Yes, we need the cups to be able to sell our coffee, right? Because we're going to be selling coffee by the cup in our store, right? We're going to brew the coffee. The barista is going to make the coffee, so we need to have some kind of way to give it to our customers, right? Without having them have to require them to stay at the store, they can just walk out with their coffee. So in this case, well, we bought some coffee cups, some business supplies, and right here we have exactly what you said. We got the medium coffee cups and the large coffee cups right here in our journal, right? In our chart of accounts under business supplies. So 11,760 and 11,765. What else do I need to recognize?
We will be crediting our Visa payable or Visa, whatever it says.
Good. So in this case, we got some medium coffee cups, and we also got some large coffee cups. Okay. And we're going to be using Visa payable because we pay with our credit card. Okay. Okay. How much is my coffee cups for my medium size?
Before tax is $50, but we've got to figure the tax on it.
Yes, we do. We need to distribute the tax on it. So let's go ahead and take a little trip to the side of our journal here. Right? If we know that my medium coffee cups are $50 and my large coffee cups are $75, right? How much tax is going to be distributed to each coffee cup? Well, let's see. We got to multiply it by 8.25%.
The medium is 413.
Okay. So let's see. 50 plus $4.13, and then we have $0.75 plus $6.19. Is that going to even it out to us for our grand total?
No, it's off by 1 penny, so we've
It's
got to figure out which one is the closest to the up and down.
okay. So in this case, we got 14 and 12 and a half cents versus $6 and 7.5 cents.
You gotta extend them one more spot.
Where?
Well, they're both, if they, since it didn't come out with anything any further than the 5 at the end, then there's zeros after it apparently. Which
Yes.
one would you go with?
Well, in this case, you got 50. You got 50
The 7.5 is up,
because you.
the 5 is down. So it'd be 4.12 and 6.19.
Okay, good, because in this case, right, you got 50.50 of a penny versus 0.75 of a penny. Which one would you most likely lean towards?
Yeah, 0.75 would say up and the other one.
Good. So that means this is going to be 54 and 12 cents. Right, there you go. Then I get my even 135.31. Okay, so in this case, that's exactly what I'm going to do. 54.12 plus $81.19, and that's going to give me my grand total of the 135.31. Okay. All right, and what else? Okay, that's it. So, what's my description going to be?
Well, restaurant supplies, invoice number 005831. I would put that they were medium and large cups, just so that you knew that's what they were for and what the tax is.
That could, okay.
Put Visa on it.
Okay, in this case, the journal's already self explanatory. You already know that you're buying medium and large cups, and you know that you paid with the Visa credit card. So in this case, that you could put that in your ledger, yes.
Do you need anything more than just that on the, yeah,
You can say how many. You could say, oh, we bought a total of 2,000 cups. Or if you want to be more specific, you say 1,000 medium cups and 1,000 large cups. But in this case, I'm just going to say purchased 2,000 cups. Okay. All right, so now we got to go to the ledger. Okay. So we bought some business supplies here. So let's go locate our business supplies. That's my checking, petty cash, cash and register, accounts receivable. Awesome, found it. Business supplies, medium coffee cups. Now, in this case, let's see, today is the 14th. We purchased 1,000 cups, right? How much were they each? I think there were 5 cents each. Yep, 5 cents each. Okay. Plus 8.25% tax, which yields you $4.12. General Journal, page 5 now. And we have it for $54.12. Okay. For any reason that we may have to return one of these cups, then we know we should be roughly getting this much amount. Okay. All right, and then what about my large coffee cups? I purchased 1,000 large cups at 0.75 cents each cup. All right, plus the 8.25% tax here, which yield me $8.19. So again, we're on page 5, General Journal, $81.19. Okay. Last but not least, we recognize that we used our Visa payable. Here we go, Visa payable. Today's the 14th. What did you buy? You could just simply say you bought 2,000 coffee cups. General Journal, page 5 now. And we charged our account for $135.31. 13531. So that should increase your total charges on your Visa credit card to be a grand total of $320.31. Okay? Next is a subsidiary. A subsidiary, we have restaurant supplies. I think it's this one right here, Restaurant Supplies Incorporated. What did we buy? Purchased 1,000 medium cups for $54.12, plus 1,000 large cups for $81.19. And this is where I could say I used a Visa credit card to pay for the cups. And this was sales receipt number 005831. Now in this case, General Journal, page 5 here. And no terms because we paid at time of service. So we went into the morning and grabbed a bunch of coffee cups. Okay. So what was that receipt amount for? $135.31. And did I make a payment to it? Yes, I did. Okay. Why is it so important for us to have this in our records? In case we decide to return some of those coffee cups, right? Because if we make a return, we need to hold on to that receipt or hold on to the Visa credit card for them to either put the money back on there or so on and so forth, right? They can take a look at a receipt and they can be able to give us the refund. So that is the very, very, very important thing that you need to know here, that You have proof of a transaction, and this is the proof. Plus, in case I need to make any returns, then I have the receipt. Okay? Even though you don't owe anything and you made a payment to it, like I said, in case you have to return some items, you can do that because we have the receipt. Okay? And since business supplies, we don't treat business supplies as inventory, right? So we're just actually going to leave it like that. Now, what happens when I do actually sell my coffee? Let's take a look at my chart of accounts before we move on, okay? Since I will be selling my coffee by the cup, right, for my in-store customers, right? Well, if I'm having them as a business supplies, how do I keep track of how many cups I have left available on hand? Or how do I keep track of how many I sold? Well, let's take a look at my chart of accounts. If I take a look at, for instance, my expenses, I have a designated spot for cost of materials, right? It's going to act as if it was part of a cost of goods sold, because in this case, we are actually selling, right, our coffee by the cup. So what are the costs that are associated that made that coffee cup? Well, in this case, this is where we will be calculating cost of materials, which we will be calculating how many cups we've used and how much did it cost me to be contributed to the actual coffee cup itself, right? To the actual product that we're selling, right? This is how we distribute and we adjust our business supplies, is we will be using the cost of material. Now, I'm going to tell you this. When do we do the cost of materials? Is it every single time we sell our coffee? No. Okay? No. We will do the adjustment at the end of the month, right? Because that's a little too much work, right? Who in the rightful mind is going to want to keep track of every single cup that they sell, right, in store, right? Especially when, the grand opening is probably going to be one of the more busier days of the week, right? Because you don't know what to expect. Are you going to sit there and count every single cup of coffee that's in your pantry for the supplies and calculate how much it cost you for every single cup that you sold? Realistically, no. That's a little too much tedious work, right? So the best way that we would be able to do this is we're better off waiting to the very end of the accounting period to calculate our total sales of how many cups that we actually sold and compare it to how many cups that we actually have available on inventory, in our pantry, right? Our business supplies, right? Now, in this case, I'm going to assume that every cup of coffee that we sell will be used 1 cup of coffee, right? 1 cup. So in this case, that is what we're going to be doing, and I need you guys to understand that because we're buying business supplies. Is that going to be part of the cost when we sell the coffee? In this case, it does, but we don't calculate it yet. We calculate it at the end because you're right. It cost me 5 cents, right, per cup that I purchased, but don't forget, I also have to calculate how much tax was. So again, that 5 cents plus tax is going to make it 5 point something cents per cup that I use, right? And we can't forget that the coffee cups is not the only thing that we're selling. We're also selling the coffee itself. We got to brew the coffee itself. So how do we adjust the coffee accordingly? And then second and third thing is, what if we need to make them sweeter, right? We have to add sugar. We have to add cream. There's a lot more things that go along when building your products, right? And those are costs to create the actual product itself. So that's what we're doing. We're taking a look at not selling the coffee by the pound, but we are going to be selling them by making the coffee and brewing them by using the pounds to distribute them through the different size of coffee cups. Okay. All right. So again, we will not adjust the coffee cups until the very end of the accounting period, okay? So what we're going to be doing is we're just going to be collecting all the information that, yes, we purchased 1,000 coffee cups. So that should get us through X amount of days that we sell our coffee. Okay? Any questions about the sales right here? All right, so we pay with the Visa credit card. Okay, so let's see what's next. Last thing I have here is the owner feels that he has worked so hard and deserves to get paid. So he go ahead and does an owner's withdrawal for $1,500. All right? Now, how would you record this? How would you record that the owner is going to withdraw from the company and take money out?
We are taking $1,500 out of checking
Oh,
under owner's equity. And then owner's equity is a contra account. So it's debit.
so you're going to take, okay, you're going to take money out directly from the owner's equity?
No, from the checking account.
Okay, from the checking account, okay.
Under the owner's equity, because that's what we have on the chart of account.
You're going to take it out of owner's equity.
No, we are taking $3,000, no, $1,500 out of checking account in credit, but for debit, we are using owner's equity.
Okay, so that one,
I mean, owner's withdrawal.
yes, okay. I was really confused because I was like, okay. All right, you have to do an owner's withdrawal, right? Because that's exactly what we would do. Now, owner's withdrawal is a part of equity, yes. Now,
Yes,
question to you: in real life,
yes.
how is the owner going to take the money?
I have a feeling if the cash is available, they probably would take the cash.
Well, in this case, where is all of our cash?
It's still in the saving checking account
Okay, so how is the owner going to take the money out?
by writing a check.
That would be the proper way to write out a check, right? Because
Yes.
this is another example of why personal and business are in place. If the owner decides to just go to the bank and just withdraw money without telling anybody, right, except for us, the accountant, they go and withdraw the money. Where's that money going? If
Into
he
his
if it goes into his pocket, what does that mean? What does it, on a business standpoint, what does that mean?
Is that embezzlement?
That's embezzlement, correct. So that's why, no, that's not the proper way to do it. The proper way to do it is if he's going to be taking the money out from his own company for his own personal use, the proper way to do it is take the business checking account checkbook
Yeah.
and writing out a check to Bob Mason, right, to the owner, and that owner is going to take that check, not cash it out at the business bank account, but cash it out into his personal bank account, okay?
Yeah.
So this is where the idea, the principle, the assumption of business and economic entity, this needs to come to play too, is that you have to be very, very careful on what you're doing. The owner can't just go to his bank and withdraw money just cause. All right? It would be nice if he could, but again, there has to be some kind of reasoning behind him or some proof of a transaction, right? Because if he just withdraws that money, that is, again, that's considered fraud. That's considered embezzlement, right?
Yeah.
The proper way to do it is just take the business checking account, checkbook, and writing him a check to put in his personal bank account. Yes, that is the
So
proper way to do it. Yes.
So the smart, clear way for all parties involved is that he counts the sale at the end of the day or week and then make the deposit to the bank, and then for his own withdrawal, write himself a check from the banking account, business account.
Yes.
That's more clear trace of what
Yes.
he did with the money.
Yes. Because again, yes, even though he's the owner of the business, he's the sole proprietor. That means every penny that he put into the business, yes, we get it. It is his money. He has full range and he could do what he wants with his money. But in this case, that's the number one thing too is, right? The purpose of you creating your own business is the sole purpose is to generate money, right? You're not doing it as a hobby. You're not doing it just because you want to have tax breaks. No, you're doing it because you want to generate money. But that means the money that you invest into the company, yes, you can take it. Yes, you could do whatever you want with it, whether you want to pull all the money out of it or whether you want to invest more money into it. That is up to you. But the proper way to do it is you have to be very, very clear with your transactions. Meaning, every transaction that you do must be justified and must have a proof of transaction, but also have a good reasoning behind it. In this case, he's justifying to himself that I'm the owner. The last 14 days of me setting up this entire business, I think I deserve to get paid. Right? That is what the owner justifies. But in this case, as a real owner, you put your own money into this company, so you wouldn't be taking money out from the company until you make a profit, usually. That's rule of thumb. But in this case, Bob Mason's a special one, so he's asking for the money now. Maybe he needs to pay something for his house, and maybe he needs to pay something, and that $30 investment took a toll on his, checking account. Right? So again, for whatever reasons that Bob wants to take the money out, he has full range and full authority, right, to be able to take any money at any given time, whatever he wants. But once again, there are standard rules and procedures of what the necessary things that you should do versus what you can do, right? So in this case, the proper way to be able to validate his transaction and not going against the principle, the Acct principle, right, the business and economic assumption, is to say, I'm going to write an actual business check to Bob and have him cash it out in his personal checking account because that is his money. Okay? But yes, when we talk into sales and things like that, yes. But we don't put in our profits right away. We don't do it until the end of the accounting period. So in this case, for the scenario, we won't do it until the end of the month. And you shouldn't be taking money away, during your operations. But like I said, right, this is just an example of what an owner can do, right? Because it's his money. He could do whatever he wants. It's his company, right? But yes, we don't close out profits until the end of the accounting period. So in this case, right, Bob can choose to take out money whenever he wants. So good. That means we got to cut him a check. Okay, so let's see. Owner's withdrawal. Let's see what account number that is. Owner's withdrawal is $32,000. Okay, so like we've mentioned, right, because it's a contra account, that is why it's debited, because it will decrease the equity. Okay. So owner's withdrawal was $32,000. Okay, and then checking was $10,100 for $1,500. Okay, so again, proper rule of thumb here is we need to write out a check to Bob Mason. So here we are, check number 1514 for June 14. Okay, for $1,500. And who am I going to write this out to? Bob Mason. Okay? And what for? For an owner's withdrawal. Okay? So there you go. You have the check number 1514. So let's go ahead and put this in here, right? We have an owner's withdrawal from company. Proof of that is check number 1514. Okay. All right. So now that we finally did an owner's withdrawal here, let's go ahead and update my ledger accounts. Okay. So in this case, I got an owner's withdrawal, which is an equity account. So we finally are dipping into our equity accounts. So here's my owner's equity, capital contributions, owner's withdrawal. Today's the 14th, right? You could say the check number 1514 because there's only Bob, right? If Bob actually had a partner in this, then that would be a total different story, right? Then you would have to address the person's name in there, right? Saying this partner's taking away money and this partner's taking away money. But in a especially when you're dealing with equity, you're gonna actually have partner number one's withdrawals and partner number two withdrawals. So you'll be able to identify it in this kind of case, right? Because we already know the owner, who the owner is. You don't need to readdress it. Right? It is the 5th journal. We're debiting for $1,500. Okay. And of course, we need to update my checking account here because once again, we wrote a check for $1,500. So how much money does Mr. Bob or does Coffee Cafe have left in the bank account?
$3,989.92.
Good. All right. So, all right, now that we have this, right, do we need to update the subsidiary ledger?
No,
Why?
that will. Well, he's not customer and he's not vendor.
Yeah, and he's not a commissioned labor or anything like that, so he doesn't fit any of those.
He can't be, and for sole proprietors, you cannot be an employee for your own job. Yes, you can work for your own business, but you cannot be put on the payroll. You can't pay into your own Social Security and Medicare, right? You're gonna have to do that on your own, privately. Oop. Sorry about that. So, in this case, then if I don't need to go to the subsidiary, then that is fine. So in this case, the reason for that being is so this is also going to be one of those internal transactions because this is the boss taking out money from his own company. That doesn't involve anybody, right? No customer, no vendor, no employee, no commissions, right? Nobody was involved except for himself, the owner. So in this case, this is considered an internal transaction. So there's no need to update the subsidiary ledger either. Okay, so that means we're completely done because this has nothing to do with inventory. So that means we are finally done with week 2. Okay, so now we need to complete our trial balance. So once again, I'm going to go ahead and put a little section here so then I know for my journal purposes, right? This will help me be able to identify where my transactions are, okay? Especially like now that I finished the second week of Coffee Cafe, that means I can tell the difference between my second week's transaction versus my first week's transactions, right? That's my way to be able to search up my transactions much more quickly, right? You can also do that by using Excel, right? That's the purpose of the program, right? You can use the Control F function to search whatever you want to do in here, but in this case, this is a better way for me to identify where my transactions are. So trial balance week 2. Okay? So that means, right, if my trial balance from all the transactions, so from page 2 all the way to page 5 here, if there is a discrepancy, meaning our debits do not match my total credits, then that means I made an error between the last 7 days of my transactions, because my first trial balance, right, that I created came out equal, right? It came out equal. So that means I know for a fact the first 7 days of my transaction, there's no problem with them. They are accurate, right? That means my problem happens between the 8th through the 14th. Okay? So again, you don't need your journal for this, but I do want you to save it because again, we don't want any problems afterwards, okay? And all I need you to have in order to complete the trial balance once again is going to be just your just your financial forms and just your general ledger, right? As I mentioned from last time, right? Every step is crucial, right? In order for the general ledger to become the general ledger, you need to have the general journal, which is step 3, the step prior to it. And in order for you to do the trial balance, you need to complete the general ledger, which is step 4. Okay? So again, let's go ahead and go through it. So again, you only need your ledger and your trial balance here. There you go. Financial form if you are using Excel. And this time I'm going to the second tab here for the trial balance number 2. Okay? So like I've mentioned, we are going to list out every single account that exists with an account balance. If there's no account balance in there, do not put it into your trial balance because it has no effect on it whatsoever. So again, we're going to go through every single account on here. So starting with our assets, we got the bank account. We already know there's nothing there. So the first thing that we're going to take a look at here is our checking account. So right now, yes, I currently have a checking account balance right now. Okay? So right now, let me see, at the end of the 14th, right? How much is my total balance right now? 398992 on the debit side, right? Whatever you see on your ledger, whether it's on the debit or the credit side, is what you're going to post it into your trial balance. So in this case, it has a debit balance for that $3,000. Now I'm going to format this real quick because I want it to have accounting style. Okay. So I have $3,989.92 in my checking account. Okay. Next one, petty cash. Haven't set it up yet. So nothing there. Cash and register, haven't set that up yet. We haven't sold to anybody yet, so there's no accounts receivable. And of course, no allowance or double accounts. What about business supplies? Okay, in the main account, no, but I did buy some business supplies, right? What was my first business supply that I bought? Yes, so in this case, again, you can use abbreviations for your trial balance because this one is we're only testing to see if you did your accounting accurately, right? We don't really care for you to list out every single account name and title and everything. So this one I use MED for medium, and then cups. What's my current balance in there?
54.12.
$54.12 on the debit side. Okay. What else did I buy?
Large cup.
For
81 and then 19 cents.
for $81.19. So make sure when you're typing everything in there, everything looks good. Again, yes, you can cell reference, but that's using 2 different workbooks. So remember, if you think your computer can handle it, go for it. If not, it will cause a lot of troubles later on. Right? No sugar yet, and definitely no creamer yet. Right? We got our refrigerator, so we have a place for the creamer. Okay. What about office supplies? Haven't bought any yet. Go ahead.
We have a desk set.
That's not an office supply.
Oh, office supply. No.
That's in furniture.
That's a furniture, correct. So in this case, office supplies, we haven't bought any yet. Right? Did we buy any inventory?
Yes.
Yes, we did. We bought regular coffee. Okay.
Which is $200.
$200. And what else did we buy?
The Supreme coffee for $225.
$225. Okay. Did we buy ceramic coffee mugs?
We ordered, but we haven't received it yet.
We have.
We have?
Yes, we have.
All right.
Yes, we have. Why is it not here? Why do I not have any of my coffee mugs here? This is the question, right? Because you have to ask yourself, oh no, I thought I remember journalizing that I received the coffee mugs. Well, where are they? Yes, we did. If you look at your inventory worksheet, yes, we did. We did receive our coffee mugs. We received them on the 10th of June. So where are my coffee mugs right now? It's not a trick question.
Did we put in the miscellaneous?
No, we didn't. Okay, so how did I keep track of my coffee mugs?
Oh, because it was periodic.
Periodic. So what is it right now?
It's in the purchase expense and flight expense.
Correct. Right now, we haven't reached the end of the accounting period yet to convert the items that we have left over in inventory. So that is exactly why my inventory items for coffee mugs there's nothing there because they're currently purchase expenses right now.
Okay.
All right.
Okay.
What about furniture?
I say yes.
Okay, why?
Because I said the wrong things 3 times in a row.
It's okay.
So,
This is the learning process.
so my confidence is down.
No worries.
But we bought the counter, desk set, display shelf, computer, printer, and cash register.
Okay, okay. Only some of those are actual furniture. Now, my question is, what about my furniture account? Is there something in my furniture account?
Wait. Yes.
What's my current balance in my furniture account?
$4,000. Oh, zero.
It's zero because we sold that furniture, right? So right now,
Yeah.
I have a zero balance in my furniture account. Is that something I need to put in my trial balance?
No.
No, because it will not affect my debit or credit in any kind of way because it's zero balance. So in this case, but under furniture, you're right. We bought a table, right? We received our table. How much was our table?
Was $6,605.08.
Okay, for 6,605.08, right? So in this case, my furniture is my main account, right? Underneath my furniture is where I have my table, my desk set, my counter, and my shelves, right? In this case, I'm telling you, I want you to record every single account that is on there, whether it's a main or sub account. Now, in this case, my main account, furniture, has no balance. So, is there any purpose for you to record that in your trial balance?
No.
No, but I do have sub accounts, right? I do have my table, right? And that was for 6,000. Oh, I made a typo. 660508, okay, for my tables and chairs. Okay. What else of piece of furniture do I have?
Counter.
Now you have the counter.
It's 1,193 in the 22.
There you go. Good. Okay. What else?
We have desk set for the office.
Yes. Now, what do you notice here? How much is my desk set?
It's recorded as 65837.
Now, I'm gonna show you this real quick, okay? Now, from my first trial balance, didn't I record that to be the same exact number, the desk set, for $658.37? This is my first trial balance. Yes, and I am going to put that back onto my trial balance for the second time. So what you're going to notice is that what you're doing here is you're going to see that some numbers will appear to be the same. It doesn't change. Why? Because this is your asset, right? You haven't sold it. You will use it, but we haven't calculated that yet. So in this case, my trial balance is going to be using the same exact numbers from my previous one, right? For certain items. And what you're going to notice is that I'm actually just increasing by adding more and more and more accounts. So the next time around, right, for my next trial balance, my desk set will still be $658.37. And I'm going to show you how to save extra time, especially using Excel, to save some time instead of having to type in that same desk set for that same exact number. This one's much more easier to do. Okay, but in this case, that's what you're going to notice, that you're putting in information that you've already previously recorded in your previous trial balance. Yes, that's the purpose, right? You're constantly going over all your numbers over and over and over again. Okay, so that's the first one. Is the desk set. What else did we buy?
Display shelf.
Okay, so notice this once again. Display shelves. Did it change?
No.
No, it's still $577.08. All right. So then now moving into new territory, did I buy any office equipment?
Yes.
Yes, you did, right? What did we buy?
Well, we bought the coffee brewer and grinder.
We're on
Coffee grinder.
office equipment.
Oh, sorry. We bought the computer.
We bought the computer, we bought a printer, and we bought a cash register.
Yes.
Okay. So again, let's see. For my computer, how much is my computer?
1834.84.
Okay. What about my printer?
378.87.
378.87. Okay. And then how much is my my cash register?
It's 649.49.
That's 649.49. And then let's see. Okay, I'm done with that section. Now I'm moving on to actual equipment. So my coffee brewers. How much is my coffee brewers right now?
It's 4527.95.
Good, right? 4527.95, right? Because now this value has changed because I just bought my second coffee brewer. Okay. What about my coffee grinder account?
We haven't put it in service yet, so it's still zero.
Good, right? We haven't paid everything that to the entire cost of the asset. So right now we have it. It's just not there yet because we're not ready for service yet. Good. Okay. Let's see. Then what else did we buy?
We have a refrigerator in service.
Yep. So I bought a fridge. How much?
3495.34.
349534. Okay. All right. Vehicles. Did I buy any vehicles?
Yes.
What did you buy?
We had a Toyota truck.
We bought a truck. For how much?
Hold on, I haven't been there yet. We have 29221.90.
That was the loan that we still owe on it. We had to include the fees.
So it's 32208.90.
Yes. Right? This includes the documentation fees of $968 plus the tax on it for $2,340. So in this case, okay, 32,208.90. Okay. Then let's see what's next. We got prepaid accounts. What is my current balance in my prepaid accounts?
Uh, 6654.17.
Good. Right? What about my deposits?
It's 1700.
1,700. Okay. What about Goodwill?
Same as before, 2100.
Okay. And no amortization yet. And last account is my miscellaneous suspense. What is my current balance in my miscellaneous suspense account?
3088.07.
Okay, 308807. Okay. So I finished all my assets. Okay. Next is all my liability accounts. Okay. So first one's first, right? Make sure you're on the credit side for calculating all of these. What's my first liability?
Account payable,
Okay, for how much?
19171.74.
Yes, 19 set 171.74, right? Again, lots of money we spent. And oh. Okay. What's my next liability?
We have a Visa card, Visa payable,
Yes, we do. For how much? What's my current balance on my credit card right now?
32031.
Right? $320.31. Okay. Let's see. What's my next liability?
Notes payable,
Okay, for how much?
649.49.
Okay, 649.49. Okay. All right. Have we incurred any payroll liabilities?
Not yet.
Not yet. Okay. Then we have utilities. Do we have utilities the utilities payable? No, not yet. Unearned revenue. We haven't sold or opened our store yet. Nothing there. Sales tax. We haven't sold anything yet. We haven't opened our store yet. And then interest payable. Not yet. Loans. Yes, we did have a loan. What was this loan?
Is that wrong for the truck?
Yes.
We have the balance 29,221.80.
Should be 90.
It's 90.
It's 29222190.
Yes.
Okay. All right, so that's all our liabilities. Let's see what's next. Equity, right? My original investment is currently still at
30,000.
Okay. Why hasn't it decreased yet? We just took money away from the company, didn't we? How come it's not decreased yet?
Because business is still in business. It's still in business.
Yes. So in this case, we haven't. Yes, so this is one of the steps, right? If you remember way back when in chapter, I believe 1 or 2, I think it was 2. Oh, no, chapter 4. We talked about the entire accounting cycle, right? One of the last steps for closing your books is to close out your accounts to equity. So right now, we're currently in the operating accounting period. So we haven't closed anything out to equity yet, right? We would have to close out our net income or net loss, whichever one we get. If we add any extra money, that's a capital contribution. If we took money out, all those things are going to be affected towards the end of the accounting period when we close out our books. So for now, we're currently in operations, so we do not need to close out to equity yet. So that's why it's still 30,000, even though we did take an owner's withdrawal, right? How much was my owner's withdrawal?
1500.
Debit or credit?
It's a contra, so I have to be debit.
Good. So in this case, I got $1,500 on the left side here because it is a debit. Okay? And we haven't talked about income summary yet. Okay? Revenues. Once again, we haven't even opened our store yet, so we haven't sold anything yet, right? We know that our grand opening is going to be on the 17th of June. So right now, we are very, very close to opening our store, just not yet. Okay? So no revenues yet. And of course, cost of goods sold, which is directly correlated to my sales, right? Haven't sold anything, so therefore I didn't have to calculate any cost of selling the product. Okay? So that means last section I have here is going to be all of my operating expenses. So starting from the top, advertising expense. What's my current advertising expense account balance?
$185.
It's 185. Good. Did I incur any bank fees?
No.
What about business expenses?
Mm. The consulting fee, $1,000.
$1,000 for the consultation fee, yes. Okay. What about freight expense? May.
We paid a shipping fee for the coffee mug.
Yeah, we paid $100 to get the coffee mugs. Yes. Okay. What about insurance expense? Yeah, anybody else can jump in as well.
It's 59166.
59166. What number are you looking at?
The insurance expense, right?
Insurance expense.
Yeah, don't we add? Oh, it's 39583.
39583.
Yes. I know
Through
what I did.
39583. Okay. Do we have any interest expense? Not yet. Any labor expenses? We did. Did we incur our subcontractor expense? Yes, we did.
Yes.
Okay. For how much?
1890.
Subcontractor expense. Any temporary work labor expense?
Not yet.
Not yet. Okay. Any license and permit expense?
Same as before, 375.
Right? Did we incur loss on disposal of assets?
Nothing new, but we still have 2,000.
Loss on disposal of asset for 2,000. Okay. Let's see what's next. Office supplies expense. We don't have any office supplies to expense, so nothing there. Payroll expenses, right? We have our employees, but they haven't started working yet. Except for two people today, right? So no salaries, no commissions, no payroll taxes. What about purchase expense?
We have it for Mag.
Yes. How much?
196.
196. All right. No returns or allowances or discounts, and then rent. 1,500 for rent.
Yes.
Do we have any travel expenses, any utilities expenses, bad debt, depreciation, and amortization expense? Right. So there you go. Let's go ahead and run my formula here. Okay. So let me see. I'm going to go equal sum my entire column here, right? And how many total debits do I have? Okay, I have a grand total of 79,363.44 on the left, and let's run the formula to my right. 79,363.44 on the right, and that means right here I did my formula where I took my debits minus my credits, and if you get 0, that means you have no discrepancy. Right? I have 0 discrepancy, so that means my trial balance is 100% correct. That means I have done a great job journalizing, transferring the amounts to my ledger, and properly recording everything as accurately as possible, okay? All right, great job, everybody. So once again, the importance about this is that means the next time we do our trial balance, a lot of these things that you've already put in there are going to be familiar. So I'm going to teach you how to use a quicker method, a quicker way to use Excel to maximize the way that your cells look, right? And be able to help you not have to re-enter everything all over again, okay? So yes, so any questions in regards to the trial balance? We match our trial balance. Any questions?